Hello everyone and welcome to another question and answer video. This one is for Paul from the US because he asked a question on whether you can use the swing days that are given in the members area for swing trading. Yes and no, because there's a way to do it and you have to match it to your swing days. So we'll touch base on that in a minute. Now let's take a look. Let's first get me out of here. Swing days, right? So this week, this is 30th of June to 4th of July. Swing days. Let's take a look at gold. Now, gold is Wednesday, Friday this week, right? So as you can see, we're up here. So it's Wednesday, Friday. All right. So Friday is the 4th of July. So the market's going to be closed in the US. All right. But this is Wednesday. And this is going to be Friday. So if you're up here somewhere, we'll think about selling next week. And last week it wasn't. This is Monday. Okay, Monday, Tuesday, Wednesday, Thursday. Last week it was Friday, and we had Monday or Tuesday, right? So there we go. Anyway, last week it was Monday or Tuesday, which as you can see is from here. Now, if the market falls Monday, Tuesday, you can follow into Friday, but is also a case where you can, if you got like Friday or Monday, Tuesday from a low level going up, you can also follow it through. But let's just see how things pan out. Now you can see many examples here, right? For example, got a swing day here that's really gone until the next swing days. But then you've got a swing day here, which the market picked up for a day only here, and then fell back down. All right. So obviously everything has to be with money management, and that's fine. But sometimes it may not happen that way. So for example, when the market is swinging, we've got the highs there and you see the fall happening, bang, bang. Then if we're at a low, you can take it as a swing trade, but it won't necessarily go to the next swing day. It may or it may not. The reason is these swing days that are calculated in the members area are more for short-term and intraday trading. So if I want to trade, for example, I don't know, like euro dollar Monday, Wednesday, Friday, if I go into the euro dollar, okay, so that's your Wednesday there, that's your Monday there. As you can see, it didn't swing. All right, so that's your Monday. All right, so it didn't swing. So we got Monday, Wednesday, Friday. Because we're at the highs, you'll be looking to sell, won't you? Okay, so this will be your Monday, Wednesday, Friday. Now, what happens when the market is at high levels like this? Sometimes it snakes along. So the market can sell off on those days. Okay, so then you have to be extra careful because during that 1 week, you got 3 possible days of when that might be. So it requires a bit of technical analysis. If the market is down, like here, and you are reversing, then going to the next swing day is logical, but you're at a swing level, which means that unless you've got a swing level where the market retraced nicely here, as you can see, the market retraced and we're chucking a UE, okay? Then once you're chucking a UE, from this zone, going to the next swing day is fine. Same here, for example. Market is swinging along. Going to the next swing day is okay. Market is swinging along. Going to the next swing day is okay. Why? Because we're following the trend and the market is down where it closed gaps and, it's pushing to the upside. You can predict that it's pushing to the upside and you can follow that through. But when the market is in a state of retracement, it hasn't really come back, it hasn't really closed the gaps yet, then these swing days are going to be like intraday levels. They're going to be like short-term trading because we don't know. The only time you will know then is like, well, that was a high, this is where we took off, we're at 37.5, it's a swing day, should I go long? Yeah, okay, that you can after the impulse pulling back into a swing day. But other than that, when we're going sideways, when we're in between levels like here, okay, you can't really keep it open for the next swing day. So you have to be careful and sensible in doing that. If you want to just trade the major swing days, then additional calculations need to be done for the asset you are trading. And that is part of, if I go to globaltrader.com club, and if I go there, this is where custom analysis comes in. You look for, whatever you're trading. It could be a specific asset or stock, whatever. Then for that, we need to do additional calculations and take into perspective, the larger cycles, and then say, you know what, this is like a good level. This is a good zone. Check out these dates. And even then you have to match it to your swing days. You can't do it without a price. So we could do long-term swing days. Yes. You still have to match it to a technical analysis price so you don't get in somewhere awkward. Okay. And this is the same with anything SP 500 as well. Okay. You see, you can take a high and follow it through a few days. You can take a low and follow it through a few days. But you could also be, because we're doing short-term trading as well, in choppy levels. Obviously, knowing these swing days is very important, because if anybody bought here, then definitely, you want to be managing the trade and so on. But, like in here as well, you see we've got 3 days, like Monday, Wednesday, Friday, and then the next week's like sold off. Let's see, that is the 20th of February. Oops, sorry, wait a second. That's a good example. You see, you've got 3 days there. Okay, so that's the 20th, and that's the 21st. That's the 24th. So that's a Thursday. All right. So Thursday, Tuesday. So Friday was a swing day. Then Tuesday and Thursday, you can see, and then the market just crashed down into the next swing day where the market stopped and was indecisive. Another swing day, and the market just pushed down. Okay, so these are more, the swing days in the members area are more for the short-term trading. For the longer-term tradings, you want to, whatever your asset you're trading, you got to have a long-term calculations done on the swing days. They can be done. Okay. And the way to use them, if you're going to use the members area ones as well, you have to wait and you have to see that you're back down somewhere for a swing day, or you're at a decent support or resistance level. Then you can follow that through. For example, if that's the impulse, you see the market making a high, market making a low. 37.5 is our golden, ratio. We like to look for this 37.5. Once the market is in that zone, you see that's a swing day. Then I could use this to go for several days until the next swing day, all the way up here. You see why? Because it's at a swing price. It's come back down. And that's the kind of thing you need to match it up to. If you do, then yes, you can use these, okay, in the members area. But that's how it is. So you can't just take any swing day and use it for days and days, especially when the market is choppy. Even when I'm using these on the intraday, we're always matching it to technical analysis and price, because just timing on its own is not going to be helpful. And just pricing the market on its own is not going to be helpful. You got to have both. So the swing days in the members area, like I said, if you match it to a good swing price, yes, you can use them for a few days until the next swing days and so on. If you're looking for longer term trading, then the major swing days we're going to have to calculate for that specific asset. And in any case, you got to match swing days with a decent price according to your technical analysis. I hope that helps. If there are any questions, anything not clear, just make a comment or write to me like you guys always do, so we can go over it. But that's how it is.